Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is on common sense trading. Common sense trading is extremely uncommon. I think you guys know what I'm talking about to some extent because we've all done some silly, stupid things in trading. Well, today we're going to talk about a lot of the silly, stupid things that traders do and what that leads to if they don't stop doing those things. Sometimes you start out with the wrong impression about the business. Sometimes you start out with expectations that are just completely ridiculous and unrealistic, and that leads you down a path of failure when you have the opportunity to succeed, but somebody gave you misinformation and therefore you're off on the wrong foot. You've almost failed before you have even started because you didn't know the right path to take. So we're going to talk about a lot of those people out there, for example, they trade penny stocks only or they trade low price stocks only, which is not a bad thing per se, but there's things that go with that. For example, wider spreads, halt, volatility, people out there risking 10, 20, 30% of their account on one trade. Doesn't take a lot of trades to blow up your account in doing that. So we're going to talk a little bit about those mistakes that traders make because, well, they want to get rich quick most of the time. Like, oh, I just lost my job. Baby needs new shoes. I got to start making money in the markets. Well, little secret. The market doesn't care about you. It doesn't care about your life. It doesn't care about your timeline. It doesn't care about your needs and your wants. Okay? So you have to earn that right. So today we're going to talk about common sense trading is very uncommon. We'll talk about, again, all of the things mistakes that traders make that hurt you and often frequently lead you to failure. Okay, so it's a very important lesson. We will be looking at both text slides as well as charts. I have a lot of charts. We're looking at home run trading type charts and things of that nature. So I hope you guys will stick around for that. I think it's a pretty good lecture. I'm Jared Wesley of Live Traders. If you like these videos, please click the like button, hammer that subscribe button. Don't forget those click notifications. I will see you guys again soon. This week's lecture topic is common sense trading is uncommon. Well, let's be honest here for a second, guys. Common sense in general is uncommon, which is why I find it very interesting. It's called common sense. It should just be called uncommon sense. And I don't want to get off on some tangent about common sense in general, but the rub about common sense is this, and I think we can all appreciate this because we've all been there. The rub about common sense is we all think we're the one who has it and the person we're talking to doesn't, right? And guess what? We've all been on both sides of that, right? We've all been on both sides of that. Whether you're driving, you're like, what is this idiot doing? Well, guess what? Guaranteed you've been that idiot once or twice or more than that in your lifetime. So we're all guilty of this. It's just some people are more guilty of it, if that makes sense. They do this more frequently than other folks. And in trading, it's detrimental, right? I mean, you can make a common sense mistake in life, and most of the time you get away with it. But if you come into this business with just a complete lack of sense, you're going to really, really struggle to succeed in trading. So today we're going to talk about it. Common sense trading is uncommon. But before we get into that, first, we need to talk about when will the insanity stop. Today I actually have two of them for you, and the reason I have two of them for you is one is an update. I know, you're like, what? Yeah, I know, I keep track of these sometimes. I have an update from a while back and then just a fresh one. So I thought, let's do two today. All right, so the first one is the update, okay? So this is from a little while back, okay? I want to say this is about a year ago, a little less than a year ago, I put this one out there. This is what bag holding looks like. For those of you who don't know what that means, well, I think you can figure it out. But hey, YOLO, you only live once. Diamond hands right here, baby. So this particular individual, this genius of a person, thought it would be a really good idea to buy this particular stock, GNUS, at $9.80. That was their purchase price. When they posted this, it was at $4.74, which in this particular case was an 88.67% pullback from the high, I guess, of their account. Well, that was a while ago, because when was the last time GNUS was a $9.80 stock? Wow, way over here. Way over here. This is a weekly chart. So back last June, so about a year ago. Okay. when they posted this online, it was at $4.74, which had to be at least here on this red bar, right? You see that red bar right there? It had to be at least here because it's not been above $4.74 since then, okay? And now where is it at? As of yesterday, it was at $1.82. So, 20,000 shares of this, I think is what they had, right? $94,800. It's now worth $35,000, give or take, whatever that math comes out to, $36,000. Ouch, from 94,000. That's a, kind of a big hit. And guess what? There's no end in sight. Yeah, a couple pop-ups. Maybe they think, ooh, I'm going to get lucky and it's going to go back. You're done. You're bag holding. At this point in time, it's when do I want to get out of this stock and take my 30 or 40 grand? It's probably not going to go significantly lower. It's not going to go significantly higher. You're just sitting here. And now I want you to imagine, okay, now I'll use an extreme case, but imagine at the same time last year, okay, the same time last year, you bought Amazon or you bought Tesla or you bought some other stock. Yeah, your 100K could be 3 or 400K, but instead it's worth 30 or 40. This is just being stupid. That's all this is. That's why it's in the When Will the Insanity Stop segment. It's just dumb, right? Come on, man. Get your head out of your ass. Use a stop loss, all right? Use a stop loss, which brings me to the next slide. I don't even know what to say to this shit sometimes. Like, I get, like, truly I'm speechless at times. This was about a month ago. Okay, CCIV averages $60 at 1,000 shares. How screwed am I? A lot, Joey Z. You're screwed. Wait, just to remind you, Joey Z, this is what's possible. So don't give up just yet because you could still lose a lot more. We don't want to see you get out now and save some money. Hold on to that CCIV because it might go to zero. Okay, well, I get it. CCIV is moving up a little bit today. Maybe it's at $22. Oh. My gosh, I mean, you're living the life. You bought this thing at $60. So guys, real quick, in the chat room all the time, what's one of the comments we frequently make? What's one of the comments we make? Who the heck buys those things after they're up 5, 6, 7 days in a row, 5, 6, 7 weeks in a row, 5, 6, 7 months in a row? Joey Z. That's who buys them. Joey Z. Okay, so you see this right here? Wide range bar, wide range bar, wide range bar, wide range bar, wide range bar. Super crazy, ridiculous wide range bar. You know what? I'm not going to buy the bottom of the super ridiculous, crazy wide range bar at 40. I'm going to buy the top. That's who buys these things. People that are featured on When Will the Insanity Stop? Guys, come on, man. Really? It's unbelievable. I mean, there's just nothing else to say here. This is ridiculous. So you thought a stock that went from 10 to 60 in 1 month was a good buy? What did you think it was going to come from 60 to 300? Get caught up in GME or something? This was before, well, no, it's probably right around the meme stops earlier this year. Now you're $20. So if you have $60,000 invested in this stock, your portfolios are 22 grand right now. Ouch! It's down 65%. Ouch! With what? No end in sight. Now you're living the hopium. That's it. That's all you can do is hope. All right. Stop losses matter, guys. This is what gambling looks like. Okay, this is what gambling looks like. Go on Wall Street Bets. You'll see it every day. Okay, so today's segment of When Will the Insanity Stop leads us into today's lecture. Okay, so this is what a lot of traders are doing. I'm actually going to use this slide. A lot of traders are simply going into stocks, having no stop loss, having no idea what they're doing. They're YOLOing it, they're diamond handsing it, and all of a sudden they think, oh, I'm going to get rich quick. I'm here to tell you that's not how it happens, and we're going to focus on that today. Okay, so do you have common sense? Traits of senseless traders. I talk a lot about traits of professional traders, traits of average traders. We're going to talk about traits of stupid traders, senseless traders, lacking common sense. And to be fair, there is a lot of misinformation in this industry. So trades almost entirely low-price penny stocks, big spreads, very whippy. They get halted quite a bit. And one of the reasons that they trade these type of stocks is because they have a small account and they think they can't afford a stock like Tesla or Amazon or something like that. True? Yeah, it's true. They're like, oh, I only have a $1,000 account, Jared. I only have a $2,000 account. And what does that even mean? What does that even mean? So what? You're trading 1 share, 5 shares, 10 shares anyway. I mean, how much does 1 share of Tesla cost? $600.
Well, it's got a $5 stop loss. That's $5 risk. That's all you should be trading anyway. But no, you want to trade the $5 stock so that you can buy what? 2,000 shares of it with a $1,000 account. Huh? So this is what senseless traders do. They only trade low-priced penny stocks. Okay. And again, I'm not knocking penny stocks. You can trade them. I'm not against penny stocks. I'm saying, but if that's your whole modus operandi, trading low price stocks with big spreads, very whippy that get halted and they're a meme stock sometimes, that's ridiculous. They have intensely tight stop losses, 5-10 cents. Why? Heck, sometimes they don't even have stop losses, but even when they do, they're 5-10 cent stop losses. But most of the time they don't have a stop loss. They're YOLOing it. Okay. Risks at least 10, 20, 30% of their portfolio. At least. And again, some of them don't trade with stop losses and they're risking 100% of their portfolio on every single trade. They're shooting for the fences. They're a home run trader. Okay? Wild gunslinger, get rich quick mentality, but they think it's reasonable. They think that get rich quick mentality actually makes sense. Okay? Undercapitalized, overhyped, overpromised, and soon to be broke. That's a lot of traders. I'm going to say that represents 75% of traders that enter this business. I'm not kidding. I bet you it's 3/4 of the traders out there. Okay? And the excuse they continually make is, you don't understand. I have a family to feed. You don't understand. I only have a $2,000 or $3,000 account. I'm the one that doesn't understand, right? Right. You're brand new and don't know your ass from a hole in the wall, but I don't understand. Check yourself. Okay? This stuff is a recipe for disaster, soon to be broke. Okay? Why? Why do they do these things is the question. See, if you don't understand the why, you're never going to be able to fix it. Okay? I call them dominant buying motives, DBMs. For those of you that spend any time in sales, whether it's car sales, timeshare sales, whatever it is. Okay? This is what people buy on. Dominant buying motive. So a lot of companies out there, they prey on your most basic emotions and desires. True or false? They do. I mean, this isn't just trading companies. I mean, let's be frank here. Why would Pepsi-Cola use Beyonce in their commercials? Well, they want you looking at Beyonce and going, damn, I want some of that. I'll drink Pepsi. She doesn't look like that because she drinks Pepsi every day. Trust me. Okay, this is what marketing people do. I go to Japan frequently. They use whatchamacallit, Brad Pitt, George Clooney in all their Roots coffee commercials. Nespresso. George Clooney's huge in Nespresso in Japan. Why? Maybe you could be like George Clooney if you drink Nespresso. It's ridiculous. It's utter insanity. Okay, but they're preying on your emotions, right? That hope for gain. Gain of what? Freedom, flexibility, lifestyle. You hate your job. You hate your boss. And that fear of loss, fear of losing this amazing opportunity that I'm giving you right now. If you don't sign up in the next 27 seconds, it will be lost forever and you'll never be able to be rich, have freedom, flexibility. You'll always be working for your boss. Wow. Why? Because people buy on emotion and justify with logic. That's what we do. And you know what? We can trade this full circle to your actual trading. Right now, we're talking about just as you're getting into the business, why you get into the business, why you're so excited to become a trader. But don't you do the same thing? You buy trades on emotion and try to justify with logic till I come and smack you over the head and go, what the F were you thinking? And then they go, yeah, I guess you were right. There really wasn't any logical reason to buy that. I just thought it looked higher. Emotion, emotion, emotion. You do it every day. I know, because I answer your questions every day. Every day you do it. You buy on emotion, justify with logic. So you got into trading because of the emotion. Ooh, the hope for gain, freedom, flexibility. Don't want to lose this opportunity. My gosh, GME might only go up for a year. I got to get in that bad boy, YOLO it, right? So if the emotion is strong enough, the logic just doesn't matter. True or false? If the emotion is strong enough, the logic doesn't matter. Oh, wait. Can I say this without getting banned on YouTube? Something that begins with a C and ends with a D and there's an O-V-I in the middle of it? Oh my gosh. You're scared to leave your house. Why? Because logic doesn't matter. That's it. Plain and simple. And we do it all the time. Okay? Some people are really extreme. Some people are less so. But everyone has a little bit of this. And when you combine this with big, huge goals like, oh my gosh, I can quit my job and work from home in my pajamas. Oh my gosh, I can make gazillions of dollars in the stock market. I can do this on a laptop in Tahiti. those are pretty big emotions, right? Pretty big dominant buying modes. So you're caught up in the money, the lifestyle, having more time, right? So you don't consider common sense. You don't consider the logic. You simply let your emotions write checks your logic can't cash, okay? Logic says $612 into $150,000 in 60 days. Seems crazy. Secret, because it is, all right? But I need money and I hate my job, and if he can do it, so can I. The emotion justifies the logic. There is no logic here. So you have to figure out a way to get around the logic, and that's your emotion. Emotion happens before logic, okay? Many of you do this, and it's a recipe for disaster. So, the get-rich-quick mentality is simply assisting you in blowing up your account by allowing your emotions to convince your logic to take unnecessary risk. And we all know, ladies out there, that emotion trumps logic, right? Somebody tells you something, you immediately get upset and pissed off, and you go, oh, wait, did they even tell me the truth? Maybe I should double check what they said first. But no, I'm all emotional up in my head because you heard 3 trigger words. Safe space. Now you're pissed off. Now you're happy. Now you're emotional. So remember, this is 2 parts. One part is that's how you feel before you enter the business, emotional, excited. But what happens after you get into the business? You still trade on emotion, right? You do. You get into trades that you shouldn't have got into because the FOMO, the fear of missing out. Because you didn't go through your checklist. Your checklist is logic-based. But if you skip the checklist, it's emotion-based. You took the logic out of it. Our government's very good at that, by the way. Okay? Don't fall for it. Don't fall for it. Okay? So let's take a look. Is it possible? Let's just talk about it. Is it possible to turn $612 into $150,000 in 60 days? Well, anything's possible. You might turn $612 into $1 million in 60 days. It's possible, but what do we have to consider? How risky do I need to be to do it? How often do I need to be right to make this work? Excuse me. How much does each winning trade have to make, and is it worth the risk? Okay? It was really funny the other day, some silly side story, but I was talking to my nephew the other day, and I was telling him how to get out of his summer homework from his mom, you know, being a kid once myself. And he literally looked at me, he's 14 years old, he goes, yeah, the risk doesn't outweigh the reward, Uncle Jared. And I was like, wow, you're really mature, because you're right. But my point is, do you do that with trading? Oh, I have this $1,000, it's my last $1,000. Does the risk outweigh the reward? How much does that $1,000 mean to you? Right? How much does that $1,000 mean to you? So those are things that we really have to consider. Okay. How risky do you need to be to do it? Do you need to risk 20% on every trade? Do you need to risk 50% on every trade? How often do I need to be right? Do I need to be right like 80% of the time to make this 612 into 150,000? How much is each winning trade going to have to make for me to make this work? So let's break it down real quick and take a look. Okay. This is what you're thinking. Oh, here's a little breakout at $2. Okay, not a bad little play on the 5-minute on BIMI. This is from like a year ago, right? $2, stop loss at $1.65. Rip! Thing went near $10. Look at that thing. Oh my gosh. That's a pretty good trade, right? I mean, the thing went $7, $8 on a 35-cent stop loss. What was that, 20R? Something like that. Well, let's find out exactly what it was. Ah, here we go. So the first trade, Homerun trading. $2 entry, $1.65 stop loss, 35 cents. Here's my $612 account. 4-to-1 leverage, $2,448. Wow. Maximum number of shares you can buy before you run out of money is 1,224 shares. I've broken it down for you, as you can see. With a 35-cent stop, you could take $428.50 of risk here. Okay? That's what you could take on this. If it works and you sell it at $9 for a $7 gain, you made $8,000. If the trade stops, you lost 70% of your account. Well, the risk to reward there is pretty phenomenal. It's 20-to-1. But 70% of your account is a hole in which you're not likely going to dig out from. So yes, it's 20-to-1 if you're right. But if you're wrong, it's the type of damage that will destroy your trading career. And again, this assumes you're scrounging $612 together, okay? Using proper risk, which would be $5, or in this case, maybe 1% or something like that, 17 shares is what you would take, okay? If you made the same trade properly, you'd make $119. So you grew your account right there by what, 20%? In one trade on 1% risk, okay? If you lose $6 or 1% of your account, not 70% of your account, okay? Let's do it again. Let's do it again, okay? Here's another one, all right? RAPT, all right? Late afternoon breakout around 2:30, $16, okay? You buy it at 16. Your stop loss 15.40, rip goes to 22, about $6, give or take. Wow, look at that daily 3-bar play inside of a breakout. I mean, other than volume, there's not much wrong with this. Other than volume, right? It's a nice 5-minute breakout. It's a nice daily. I mean, whoa, it's pretty good. What's it look like? It looks like this. 16 entry, 15.40 stop, 60-cent stop loss. Okay, $612 account. $2,448 of leverage. We went through that in the last slide. The maximum number of shares you can buy before you run out of money is 153 shares. So the maximum risk you could have is $91.80, which is what? About 15%, give or take, right? There it is, okay? So if it works and you sell it at $22 for a $6 gain, you made $918. Wow, it's 150%, right? You made about 150% gain. But if it stops, you lost 15% of your account. It's not 70, but it's a lot. It's not 70, but it's a lot. Proper risk, 10 shares, $60 profit. Man, that's 10%. That's not bad. If you lose 1%. You got to realize $612 is not a lot of money. Okay, it's not a lot of money. If that's all you have, well, you don't have much money to begin with. So $100 should be a lot of money to you. $60 should be a lot of money to you. Okay, we'll do it one more time. One more time. All right. $20 right here, little 5-minute 3-bar play. Buy it at 1965, stop loss at 1810, rip. Like absolute rip. Okay? Pulls back, chops around. But it goes to $45. It goes up $25. Look at that gap up. Nice gap, right? Look at that consolidation on the daily. Gaps over that area. And this thing rips. You get in right here. You're home run trading. What does that look like? Well, $19.65, okay? 18.10 stop loss. Yeah, it was that wide, okay? $1.55, you can buy 124 shares. 124 shares. Risk $192. What's that? 30+% of your account, 31% of your account. If you win, and remember, one thing we're ignoring here, guys, just FYI, we're living in fantasy land, right? I think you'd agree. What's the fantasy about this? We're selling at the high almost on all these trades. We're selling like a little bit off the high. Not at the high, but, a little bit off the high. What are the odds you're selling just off the high? Come on. Stock goes $20, goes $22, and you get a $20 gain out of it. Oh, okay. Yeah, that sounds reasonable on every trade. Yeah, absolutely. Common sense is uncommon. That's why it sounds reasonable. Okay? So you possibly could have made $2,500 on this. If you lost, you would have lost 31% of your account. 1/3 of your account almost. In one trade. Proper risk, you would have made $61. It's pretty damn good. It's 10%. 10% in one trade. If you lost 1%. Okay? You would have lost 1%. So, come on, man. Come on. Be honest with me. How many of you got excited seeing those examples? You can admit it. Giving it some thought? This could work. Man, Jared's talking about what we shouldn't do. But all I see is what I should do. Damn, give me those 3 stocks every day and let me sell at the high. Why? Your emotions are getting the best of you. That's it. Reality check. You saw those 3 charts and you're like, shit, you know what? This might actually work. Damn, there might be something to this. Screw live traders. I'm going to go somewhere that tells me how to get rich quick. My kid needs new shoes. Your emotions took over during those 3 charts. Not that they were terrible trades. That's not what I'm trying to say. But the possibility, for example, To make $8,568 on a $612 account probably got your spidey senses tingling. Something was pointing towards the sky. You couldn't help yourself. And this is what happens. Your emotions take over. Your emotions rule your logic. Logic says those trades are 1 in 1,000. At least 1 in 100. At least 1 in 100. Come on. To make 20, 30 times your money on one trade? Pie in the sky shit. Does it happen? Sure it happens. How frequently? And then it doesn't happen that often. And then you're going to tell yourself you're going to get out at the top. And then you're going to risk your entire account at the same time. Some of you are still thinking about it. Some of you are still considering it. That's what scares me the most. How often do you think they happen? Not very much. So, let's get back to reality. Has everyone read that book, The Millionaire Next Door? I have. How real success is created. This is in trading, this is in life, this is in general. Hard work, discipline, good money and financial management. Time, this is the one that a lot of you guys have a real hard time with. Time, and no excuses. A lot of people struggle with this one too. The victim mentality, okay? That's how actual millionaires and successful traders do it. Sure, guys, sure. Could you tell me about some guy who made $10 million on GameStop? Sure you could. Guess what? That's a unicorn. It's 1 out of 500 million people. How many people made that on GameStop? 2, 3 people? Took 10,000 and turned it into $1 million? 2 out of 7.5 billion people on the planet. But you think right now, it's logical right now. We're crossing over here. You think because your emotions are so strong that that's a logical, realistic odds. Your emotions are actually convincing you it's logical. Think about what I just said. Your emotions are trying to convince you that there's logic in this. But there's not. You're going to work your ass off to be a great trader. You're going to need a shitload of discipline, really good money and financial management, and despite all those things, it's still going to take you time. You're going to have to overcome demons. You're going to have to learn what charts are, the trading process. You're going to have to learn your emotions and what good money management and trade management looks like for you, given your time constraints, your personality constraints, your intangibles, your money constraints, all of those things. That shit doesn't happen overnight. And then you have to overcome the excuses. Wow. So, poor and unsuccessful people do it differently than that. And then they complain about the people who do it properly and say, wait for it, oh, you're just lucky. Yep, just lucky. Guys, here's the thing. You know, you look at Bill Gates, Jeff Bezos, Mark Zuckerberg, Bernard Arnault, right? You look at these people. One, they're not lucky, but even if you wanted to consider them lucky, that's not how 99% of millionaires make their money. They make it in the long haul, living below their means, driving Honda Accords, and living in homes that are well under their net worth. That's how it's made for 90+% of multimillionaires. It's not overnight success. What is that? Isn't there a book out there like 10 years to overnight success or something like that? This relates to trading in a big time way. Get rid of the emotion and start trading with logic. The only emotion that you should be caring about is the emotion of the chart. Is there fear in there? Is there greed in there? In the chart. And let your logic determine the emotion on the chart. Okay? That, you saw this a week or two, that's a good trade. That's a gap down under a topping tail, under a pivot with room to drop. That's a beautiful 1 minute chart. That's a good trade. Look at the emotion of the chart and use your logic to take the trade. Okay? Here's one from yesterday. Billy took this yesterday. Wide bar, narrow bar, rip. Let your logic say, wow, what a beautiful 3-bar play. The emotion is based in the pattern. Buyers are igniting the move up on huge volume. A little bit of a resting period, continuation, move and go. Boom, we make money, we move on, fight another day. In this case, we made good money. This is a reality check for you guys. If you think anything that I have said is suspect or is untrue, or you think you're going to do it differently. Okay, this should be a wake-up call. Now, millennials aren't as young as you think they are anymore. Millennials are not as young as you think they are. They stretch all the way back to 1981, 1982. Think about what I just said. Millennials stretch back all the way to 1981, 1982. Depends on what your cutoff is. They're damn near 40 years old, the oldest of the millennials. They're not babies anymore. Some of them are. They're in their late 20s. But a lot of them are in their 30s, early, mid-30s. 53% have less than $1,000 in their savings account. 76% of 25 to 40-year-olds in America have less than $5,000 in their savings. 76%. Why do you think they want to get rich quick in trading? Why? Because they've been idiots with their money for their entire life. They've been foolishly stupid with their money for the last 10 years, and they know it, and they know they have 10 years to make up. And they're like, well, shit, I should have done this at 25 or 30, but I didn't, and now I'm 38, and I don't have any money saved for retirement, and I hate my boss anyway, and I want to see my family more, and I'm underpaid and undervalued, and oh, I hurt, and where's my safe space? You know what? I'll be a trader. I'll make it all back in 6 months. I'll make up for the 10 years of stupidity. I'll make it back in 6 months. So what do? They pile more stupidity on top of stupidity. And you do it all the time. We can question the report. NBC News found Generation 4 at the University of Chicago survey. This was 3 years ago. University of Chicago survey. This is sad. 24% have none saved. 29%, less than 1,000. 23%, 1,000 to 5. Put that all together. Oh my goodness, 76%. 2% have $30,000 to $50,000 saved for retirement. 67 say they'd have difficulty paying an unexpected bill of $1,000 right away. And you wonder why credit card debt's so high. Now, you're going, Jared, you're veering off. I am not veering off. This is on point, on topic. Why? Because you're coming into the trading business knowing you're broke, trying to make a ton of money with no money, and you're trying to do it in a really short period of time. Why? Because you're basing everything off of emotions. If you want to be rich, if you want to be a great trader, if you want to be successful in anything, you're going to have to give it time. And if you don't want to give it time, don't do it. Don't even start. Keep your job. At least you'll get a paycheck out of it. You may hate your boss, but at least you'll be able to pay for your kids' food. Trading is going to be nothing but frustration to you if you come in with these emotional-based ideals or opinions about the business. It doesn't work like that. This is the same. I'll take it back to the charts. It's the same for the charts. If you're looking at a chart and you know damn well it's up 7 bars in a row, wait, let's go back just for fun because, well, it's fun. Yeah, people really buy these stocks up here. Well, we know that based on logic, right? Of course, because it went higher. Somebody has to buy it to push it higher. Well, in this case, it was Joey Z. He bought it at $60 and somebody sold their shares to him. The smart people sold their shares to him. The not so smart people bought their shares. And now you're bag holding. And this, I don't know anything about this particular person. And this is what leads to this. That mentality leads to this. And this is where you guys are missing. You don't see the bigger picture. You don't understand how those emotions are destroying your entire life, let alone your trading career. Selling too soon, it's emotional. Scared to take a trade, it's emotional. Think you're going to get rich quick, it's emotional. Not following the general rules of your trading plan, emotional. It's all based on emotion. Stop. Base it off of logic. You'll be much more successful. You won't get upset as often. You'll make more money. You'll be a better trader. You'll have more freedom, more time, more flexibility. You'll be happier. I understand. It's challenging. I get it. But anything worth doing in life is challenging. If it wasn't challenging, then, well, everyone would do it, and then that wouldn't be special. It would be average, and we all know average isn't special. Average in America is not that great. I mean, compared to the rest of the world, it's phenomenal, right? It is. It's truly incredible. But here, in our space, in our bubble, It's not as great. And being an average trader means not making money. You might not lose, but you're not going to make any money. So I put this last one in there because I'm doing a wealth building course and doing a lot of data searching, data mining for different generations and where they're at financially. And it was honestly quite depressing. I just thought I chose millennials because I think a good portion of you that watch this or listening are in that bracket. Stop being foolish. Stop being stupid. It's not just about retirement. It's about how you enter the trading business. It's also about every time you take a trade. Once you get into that trade, what the expectations are. What's driving those expectations? Logic or emotion? Why'd you get out early? Logic or emotion? Why didn't you take a trade you're supposed to take? Logic or emotion? Why didn't you take a stop loss? Logic or emotion? What's driving you? It needs to be logic. All right, I'm Jared Wesley of Live Traders. I hope you guys learned a little something about emotions versus logic and how detrimental it can be if you choose one over the other. We will get back at it again next week.